Let's bring in Dan Geltrude. He's a financial expert and the founder of Geltrude and Company. Solid numbers, Dan. Does this mean that tariffs and interest rates are not yet causing employers to pull back significantly on jobs?
Well, when you look at jobs report numbers like this, right, of course, very positive on the surface. But, there's always mixed messaging here. So when you look at the expectation versus putting on 147,000 jobs, hey, that's great news. But you have to go beyond that a little bit and say, well, you know something? The private sector job numbers actually fell. Now, I believe that's a bit of a hangover from the prior administration. And we also had a public sector surge in jobs. In other words, government jobs grew by about 73,000. So that's not exactly where we want to be. So when you look at these things, you have to go beyond the headlines and really dig into these numbers. Do I think they're positive? Yes, I do. Do I think the markets are viewing it that way? Absolutely. But again, there's always other things that have to be taken into consideration.
I got to ask, though, what's the catalyst for the strong data? What are the new jobs coming from?
Well, the jobs are coming from, again, a lot of governmental related jobs in healthcare. What we're not seeing enough of is manufacturing jobs, right? And that is something that Donald Trump has really been putting a lot of emphasis on. Now, of course, he's only been in office 6 months and he's done a lot, no question about it. But it takes time for his policies to go into place. For example, he is starting to focus in on vocational training. Very, very important in terms of building that manufacturing base. He's giving incentives for companies to manufacture and produce in the United States. So it's going to take time, but that is where I really would like to see the improvement of the numbers. I think we'll get there.
In your opinion, do tariffs and interest rates still loom as a threat? Could we see those things impacting future job reports? Or if it hasn't happened by now, do we expect that they won't impact future job reports?
Well, it's hard to say, right? There's a lot of focus right now, and there always is on the Fed interest rates, right? So in order for the Federal Reserve to drop those rates, you got to see slower job creation, rising unemployment, softening of the wages, higher underemployment. We're not seeing that right now. We're seeing stronger than expected hiring. We're seeing unemployment dropping, and we're seeing wage growth remaining steady. So when you look at those things, I don't think that we're going to see interest rates being lowered in the near future. Now, tariffs. A lot of people are saying that the tariffs are going to be inflationary because it's going to drive up the cost of goods. If that does happen and we get into more inflation, again, we're not going to see interest rates coming down. High interest rates slow growth. That means if those things play out, to answer your question, yes, we could see less job creation.
Let's imagine a pie chart. How important are jobs to the equation of the overall economic health of the country? How big a portion of the pie is jobs in that equation?
Well, it's a significant portion that, if I had to imagine your pie chart there, I would say it's probably half the game, right? Because what we always want is to see Americans working. When Americans are working, they're prosperous. They're also paying taxes, right? Which is good for the government because we got plenty of debt out there. And that's what Donald Trump is actually relying on. He's relying on we're going to get people back to work. They're going to be able to grow the economy. And without raising taxes, actually lowering taxes, we will have more tax revenue coming into the federal coffers.
So before we go, I always like to ask this to our experts. Whenever we're talking about anything financial, what are the economic and financial bellwethers that you're watching for next? What should the people be looking out for?
Well, look, you got to look at where inflation goes because that is the driver of everything. And we have some uncertainty out there, particularly how these tariffs are going to play out. So I would tell you this: if inflation continues to decrease, and we'll see more of that because fuel costs are coming down, that's a really positive sign for getting prices down. When we see that happening, to me, that's the bellwether. Inflation starts coming down. That is where we're able to actually see true growth in the economy.
Dan Geltrude is the founder of Geltrude and Company. Good to talk to you. Thanks for staying up late with us.
Thank you.